Yes, welcome everyone. Here we are. A new day, a new live stream, and we have some news. So let's see what we get in the upcoming hour that we are going to be live. 1 hour, 15 minutes. Should be sufficient to get a bit of a good idea on what is happening with price, as the volatility in the upcoming hour might be high because of the FOMC news, and I believe there is some stock data coming out. I'm not sure, but that is stuff that Odin told me in Discord, so something worth checking in a second. But yeah, we just started the live stream, and Obelix, what a guy, coming in hot immediately over here. Wait, let me make this bigger over here. So Obelix, man, Obelix doing amazing with his trades and shares his success with the community. Thanks, Obelix, I appreciate it, man. Thanks for the support once again. I think by now you must be the #1 gifter pretty much here on the channel. But thanks for the 10, man. What a start of the stream. Now, everyone that got gifted, please make sure to fill in the form that Jeroen posted here in the chat. Thanks, Jeroen. And we will bump you up to silver, which is the short-term updates and all that good stuff. So we're talking to Ways of the Jedi, Matt Eagle, Solid Fab, Dave DeSega, Sock Insanity, Vincent Suen, NKG01 Dev. That's a classic name, has been here for a very long time. Edward Varner, Tim Young, and Traveling Studios. Welcome, everyone. What's up, maybe a Band-Aid? Good to have you here. Oku, welcome. Alexandra Doxe, Guilian Deon Tute from Argentina. Hello from the south of France. Erik van der Boogaard, hallootjes. Goed dat je erbij bent, Erik. Serdar Hash. 35 people forgot to smash the like. Yeah, if you just entered, well, we didn't really do anything, right? The likes can come after the analysis, no? Mark, welcome. Kanashimi, what's up? Interest rate decision, and in 20 minutes, the Powell speed. Yes, Powell speech. So yeah, that is also the reason to be live. It's the reason why I decided to not go live this afternoon. I wanted to go live this evening, and it also gave me the opportunity, actually, to visit runes. So with my wife, we actually went to Chateau Neuf, and it's the runes actually of Chateau Neuf, 30-40 minutes drive, and it was good. I will share stuff on my Instagram, like photos and that sort of stuff. So yeah, Sibel, welcome. Good to have you here. Most boring speech you can listen to. I never listen to it. I just listen to the chart. Now, BTC Boss, what's up? How you doing? Leon No Joke, Ice Cube Lady, welcome. Louay Muhammad, good to have you here. Versin, what's up? NBND Sniper, yo, gamer name, yo. Okay, in today's live stream, what we're gonna do is, first of all, we will observe the price action because volatility is expected. So we will just see what happens on the chart first, and then how it impacts scenarios second. So then at a later stage, we get to the Elliott wave scenarios on the chart. And then, and then afterwards chatting Q&A. So actually the beginning is like checking the chart, chatting Q&A, seeing what happens, just observing. And then afterwards, we start the analysis. So, probably most of you, the people that are here, have seen the video that I posted earlier today, which is the analysis, where basically here on the 15-minute time frame, your bullish scenario is what we have here. Right now, it is, let me summarize at least what I said in the video. So your bullish scenario is a 1 or A, you look for 2 or B, and then continuation up in a wave C or a wave 3. Now, it is very uncommon for a 2 or B to end over here before, let me do this by the way, there you go. Very uncommon for a correction to end before the 0.382 Fib time. So in other words, probabilities would be higher to continue the correction either as a flat ABC or a WX ABC in a wave Y, right? WX ABC Y, right? And then look for price to move to the upside to get a wave C. So that is the bullish scenario, right? And the probabilities that come with it. So probabilities higher to continue ranging. And then in this case, of course, you look for price to move towards the upside, support to the downside, 786, daily naked point of control at 99, right? And the bearish scenario, which I don't have in my folder actually, would be to count this as a WXY, like a zigzag family structure, not really anything else possible. And then this move to the downside here, right? A, B, C is a very clear count. You have a move down, structure up, and then another 1, 2, 3, 4, 5 wave structure, right? Let's see. Yeah, so another 5 wave structure to end it. So this is quite nicely a 3-wave structure, and therefore the basically only bearish scenario really would be for price to have a 3-wave here, right? And then start a diagonal structure and then correction continuation. But it's too early to talk diagonals, right? It's too early to talk diagonals. Doesn't really make too much sense. Because in that case, this would then be a wave 2. You still need 3, 4, 5. So it's just a bit too early. Alternatively, a alternative bearish scenario would be that this correction is quite simply not yet finished. So this is a zigzag family structure. You would do like count it a W. Then you have an X, whatever X is, right? And then you look another for a Y. And then wave Y is either a zigzag, flat, or a triangle. But we need to be very patient with those type of scenarios. So yeah, definitely keeping an eye on the potential of an ABC here, which I find very interesting. And then the bearish scenario probably would favor a bigger corrective structure and then a WXY compared to starting some sort of a diagonal. It's just too early. So yeah, so in other words, the bearish scenario would be like W and then you have X and then Y, right? And then price retraced to the 0.7, which means that the probabilities are lower for a double zigzag to the downside, right? We hit the 0.7. So in other words, the moment you hit the 0.7, you got to think about a flat or a sideways WXY. Now this would then be WXY, right? That would be the end of your X. X finished, and then you look for Y. Now, because W then needs to be a zigzag of some sort, your wave Y would need to be either a flat, A, B, C, or a triangle. We got to wait, no? So if we then put the polylines on the chart, people love the polylines. So let me put the polylines on the chart for local price action. So I'm gonna do a little bit like that, and then tuck, and then 3, 4, and then we have our 5. So we'll make this one blue. And then for the quote-unquote bearish scenario, you then have Y, and then you have A, B, C. Make this yellow. And alternatively, that, and then A, B, C, D, E. There you go. Pretty much a summary of the higher probability scenarios. The diagonal, which is 1, and then you need a 2, and then you need a 3, 4, 5, 3-wave continuation. It's just a lower probability. It's too early. So yeah, better remove it. So at the moment, this would be something that I'm, this is like a summary. Now, in an ABC, if we look for a flat here, A, B, C, and a flat, your wave C can be very extended, right? Doesn't mean this is not that I have any particular support here to put the polylines at that particular place. We have value area low is there, so that's at least something. But of course, it can move further. You have a daily naked point of control. But then you would expect a bounce. And then depending on the bounce, you would look for what's next, basically. Yeah. Well, I mean, put this in a polyline. 50 minute polylines. Mr. Polyline's Picasso. Yeah. No, I mean, I started, of course, with the polylines a little while ago, and it's good. Yeah, I got great feedback on using the polylines as well. So I'm glad all of you, or most of you at least, like it. Okay, so yeah, Martin, that is basically your bullish and bearish scenario. Sam, welcome. What's up? And Sam, probably next week. Might actually be this weekend. Yeah, I think on Saturday, we're gonna go skiing here in the Alps for one day because the ski resort it's like 2 hours drive. We go with new friends that we have here in France for one day, and go early morning and then back again in the evening. So let's hope that my knee holds on and I don't fall. Hopefully, though, your knee is doing better. Yeah, exactly. Be careful, don't crash like me. But sometimes it's not because of you. I've seen crazy things on the slopes. Abdallah, welcome. Pineapple, how you doing? Guilian, love you, man. You're the best. Cheers, Guilian. Thanks, man. Thanks for the support as well. It's nice to see, like, you're always here. Very, very active, of course, as well. So thanks, man. Perkio, what's up? Good to have you here. How do you get confirmation for that scenario? Just more price action needed to be able to tell. What's most important is the confluence between the different scenarios, right? So if you look at the polylines, basically showing your scenarios, right, unrelated to how low it goes, you would look for a bounce, and depending on the bounce, you then get your structure. No? But at the moment, if we zoom out, so this is 4 hour. I didn't cover the 4 hour, right? So you can use different time frames to get a better idea of what to expect locally. No? So on the 4 hour, first of all, your probabilities are higher that this is not the end of a corrective structure. So the probabilities are higher that whatever is going on here is part of what was going on here, right? It doesn't mean you need to make another low. It just means that your corrective structure is extended in time and price, of course. And that is just probabilities, right? Remember? So we have our impulsive subwaves, wave force, stock rising, wave 4 over here. In 4% of the wave force, you can get a double zigzag, but it is more common to have a flat FL 35%, zigzag 20%, but that is irrelevant, and potentially a double 3, which is a sideways structure, W, X, and then you get a Y, but Y needs to be a flat or a triangle, right? In other words, A, B, C, D, E, up, or A, B, C, and then up. Alternatively, you have your flats, A, B finished, 1, 2, 3, 4, 5 in C, continuation, right? This is an ending diagonal. Ending diagonal appears in 36, holy moly, 36% of your C's. And, or what is it? Yeah, here, 36. Impulse 64, but an impulse, this counts better as a 3 wave down instead of a 1, 2, 1, 2, and then a big 3. I got to say. So, yeah. One to keep in mind, the only issue here is that your wave B is incredibly short in time because your B ended before the 3A2 fib time compared to A, which is very short. And a regular flat, which is what you see here, where wave B just takes out the high of the starting point of A, is a little less common than an expanded flat. There we go. So same A, which is your double zigzag, WXY, by the way. And then look for a bigger 3-wave structure in Y, target area, and then get your bullish, your typical bull market crash, I suppose, and then you continue. Yeah, very interesting indeed. Now, if you keep these scenarios in mind on the 4 hour, right, then in a wave 2, you need zigzag family structures. So either A, B, C, which is what we have on the 15, possibly W, X, Y, right? Like a 3-wave structure to the upside. And then you want to have another three-wave structure down in your wave 3. Right? Which again, highest probability is a zigzag family structure. Now, if this here would be the end of your wave 2, this might go very quick, but I'm here to answer all of your questions as well. But if this is the end here of your wave 2, then you can see that your wave 2, if moved here, is very short in time compared to 1. The vertical yellow line is taken from the start to the end of 1. It is a fib time, comparing 1 in time with 2 in time. This high clearly finished before the vertical yellow line, lowering the probabilities that this is the end of a wave 2 in a diagonal. And by all means, looking for a 1, 2, 1, 2, 3 down has lower probabilities. So therefore, you prefer to look for a structure that's not finished, either ABC or WXY. It doesn't really matter. You just look for this. So there you go. And then in an expanded flat structure, you would also look for ABC. So A, B, and then C. 1, 2, 3, 4. Of course, this can be 1, 2, 3, 4, 5. A, B, C, also possible, right? But you would look for impulse, correction, impulse, which is actually similar for your potential too. By the way, we also have a bullish scenario. It's not that we don't have bullish scenarios, but in this case, this is your wave 4 on a daily time frame, which means you have a double zigzag, W, X, Y. And a double zigzag WXY in a wave 4 appears in 4% of the wave 4s. Low probability. Flat is more common. WXY is more common. So that's why it's more interesting to look at those structures on the higher time frame, the 4 hour, the daily. So, yep. So if we then jump to the 15, if we would talk about probabilities, then preferably you form zigzag family structures, which means A, B, C, W, X, Y structures. So therefore, your higher probability would be blue, arguably W, X, A, B, C in a Y, but that would be your higher probability, and then the ranges yellow and purple come in second. Right? Okay. Perkel. Fun fact. When I first found you, I disliked you or your style didn't fit me well and I unsubscribed, but later on I came back. Guess I was just too noob when I saw you for the first time. I'm pretty sure you're not the only one, but don't worry. No hard feelings. No hard feelings. Like, you know what it is? Elliott waves is, of course, incredibly niche. And even though so the analysis just now went very quick, right? It went very quick. But I always try to explain, especially in videos and live streams, I try to answer as many questions as I can and try to explain things as easy as it is. But it's still Elliott waves. And I think, as an Elliott wave analyst, you always need a bullish and bearish scenario, but you need to make a probabilities distinction between bull or bear. Which scenario has a higher probability? Your bullish scenario or your bearish scenario. But you need to present both. And why that is important is that if your bullish scenario gets invalidated, you need a bearish scenario that then becomes your higher probability. So if I present a video to you and I would only cover a bullish scenario and then it gets invalidated, right? Because the price doesn't do what the bullish scenario wanted price to do, right? Then everyone's in the dark. Everyone's like, what the fuck? And now what, right? But if I present a bullish and bearish scenario, and then, well, probabilities might be higher in that video for the bullish scenario, but if it gets invalidated, we immediately know what else to look for. And generally, what I like to do in my content as well is explain why is the higher probability for the bulls compared to the bears, so that there is a foundation, there is an explanation. I'm not just saying, this is the highest probability, this is the scenario, and out. No, I explain the why behind the scenario. So, and that might for some be too much information, or it's too much detail. They don't like bull or bear, or you have the people that maybe say, well, so you present a scenario where price goes up and price goes down, right? But they don't get that it's probabilities, right? It's not about bias. It's not about only up, only down. It's about probabilities. You need to know the probabilities. So what I like to do is present both a bullish and bearish scenario per time frame, usually explain the why behind the scenario, what makes that scenario a higher probability compared to the other, so that people that watch start to learn and hopefully one day understand themselves what makes a scenario a higher probability compared to the other. So it's also a form of education. If I would only present the scenario as it is, and I'd only do one, and then I'll be like, and that's it. And no one learns anything, right? And everyone's just looking for, do we go up, do we go down? Oh, he only presents one scenario. There's no educational value. So I like to explain those type of things. And what I also like to always explain is, how do probabilities change? So yes, probabilities might be higher in that particular video for the bullish scenario compared to the bearish one. But if a certain level is hit or a certain Fibonacci level is touched, that is when the probabilities change. And I think that is value that I think is very useful for people that understand you always need a bearish and a bullish scenario. We have probabilities, but you always need the backup. And when one scenario fails, the other scenario becomes the primary and you need a new alternative. So it's very, I guess my channel in a way is very neutral, very unbiased. I don't care about bull or bear. I don't care about 100K Bitcoin. I don't care about a 10K Bitcoin. I care about analysis. I care about probabilities. And I present both directions, explain the why, explain how probabilities change. And of course, in every video at the end, I show my polylines and my probabilities. No? And then... yeah, and this is literally, by the way, what I use in my trading. I do not hold anything back with my analysis. The probabilities I communicate, the analysis I do, all of the things I share, I use everything in my own trading. So this is my analysis chart. This is my YouTube chart, basically. I also have a analysis chart. So that's the T over here. So can you see that? Yeah, here. So this is my trading chart, which has a different layout. It's very boring, very gray. I don't have price because price is not important. I don't have price. I don't have time. All the candles are gray. All my lines are gray. All, boxes are blue. But every day I make a trading plan, and there's different things that I write down for myself. And I always start with my general feeling, right? Then I also have so general feeling, things I can improve. I have a box that talks about Elliott wave probability. So what is the highest probability on the daily, on the 4 hour, on the 1 hour, potential 15 minute, so that I know what the highest probabilities are, right? Important for potential directional trading. I explain if there is trading setups, potential setups. I have a box that says entry if, and then I explain new longs, new shorts. If this happens, then I enter. Then I have a trading management text box where I write existing positions, new longs, new shorts. And I write exactly for the new positions, I write entry, exact level, stop loss, exact level, take profit, exact level, and how I manage it. And then I have, what's the last one? Trading mental, what's that? Mental, I have a mental box, something like trading psychology box, basically. So I use the Elliott wave analysis in my trading. It's creating a directional bias. Sometimes I trade purely Elliott waves as it is. And other times I use other tools in confluence with my Elliott wave analysis to trade in the right direction. So yeah. Everything is communicated, but it might be tricky at times. Those are the structures. So from left to right, impulse, leading diagonal, ending diagonal, zigzag, double zigzag, triple zigzag, flat, double 3, sideways WXY, triple 3, right, WXY, XZ, sideways, CT, contracting triangle, ET, expanding a triangle. There you go. What's up, nutrition trader? How are you doing? TP. I prefer trend lines to polylines, but trend lines don't work well for corrections. The polylines, of course, they just show the expected movement of price per scenario, right? It's not a support or resistance line like a trend line, for example. Thanks, Kanashimi, man. Jeroen had the same. Look at him now, Mr. Mod. Nutrition trader, February, second strongest month in normal year and also in post-election year. Speaking of statistics, does seasonality flows into your analysis? No. For me, it's purely my Elliott wave analysis, which is unrelated to seasonality or specific months. Now, I do know there's websites out there that track all the months since the beginning of Bitcoin, and if they're bullish and bearish and what the probabilities are, which I guess for some will definitely help in their trading and their analysis, but it's not something that I use. Umar, welcome. Welcome. He was just too good with Elliott waves for me. It scared me away. That's something. I have so much learning to do. Elliott wave is so different from any tool I used or I have used. It is. I mean, it's very... It's incredibly theoretic. Or is that a word? Theoretic? Theoretisch in Dutch. Well, I might have put a little bit of Dutch in my English there, but it's very theory heavy, and it takes a long time to, first of all, study the theory so that you eventually remember it, and then second, get to the implementation part, which of course the chart is never as perfect as the textbooks. So it's not as easy to identify a clear impulse or identify corrective structure, right? But that's where experience comes in, and hopefully the people that are here, they will understand, they will learn while watching. Sibel, when I watched the first video of Kun, I fell in love. Yo, Sibel, you're flattering me now. I'm blushing you. Please, take it easy. Take it easy. It's a live stream. We're not having a private conversation here. Sibel, everyone, by the way, she's a rapper in the Netherlands. How about that? That's really cool. What's up, Rahul? Also, since it's probability, one scenario gives a wrong perspective on. Yes, correct. That's correct. You need to cover both sides. Oliver, welcome. In which situations do you do limit orders, and what are your confirmations for market orders? Now, this is, of course, very strategy heavy, but limit orders, limit orders are generally set around target boxes, and then they need to be in confluence with very clear Elliott wave structures. So, for example, I think I had this was a limit order for me. Wait. So we just go back in time. But for the ones that remember, we actually had a daily naked point of control here. I don't know if I can get it by using the volume profile tool, but let's see. Yes, we can. So there was a daily naked point of control here, right? So the 14th of January created a point of control for price went up, and then this is the 15th. Now, probabilities were higher for price to move up. Remember, we had a target box here, which we didn't touch. There was a daily naked point of control over here as well. And this was a typical trade where I had a limit order on the daily naked. Actually, if we are very specific, I put it $100 above the daily naked point of control because platform differences. I analyze on Coinbase. I trade on Blowfin. I just want to make sure I get filled. So, okay, my entry was a little bit above in that case, right? And then my entry was, I think, below this wick, if I remember correctly. And then I was looking for price to move up. But I had a very clear Elliott wave. Probabilities were higher if you go back to move up, right? This structure to the downside here on the low time frames, as per my analysis in the morning video that day, the 15th, was higher to be corrective. Now, if this is corrective, probabilities are higher to take out the high. Now, we went up. We didn't take out the high. We didn't take out the high. We came back down again. Now, perfect. That's the more reason, right, to still look for that high. So I only tend to limit if there's a really good opportunity that aligns with Elliott waves, the structure. So the structure of Elliott waves, and then also preferably in confluence with some of my boxes. And with regards to market orders, that's more patience. A great market order example was here at the low. So I did not trade the low. I'm not interested. It was too volatile. But then we started ranging. And then over here, price started to create multi-1-2s on the 3-minute time frame together with bullish CVDs, right? And that was a market order for me. Right? That was a market order. In the current range, we go back to where we are now. Price on the 3-minute. This was a market order. So price came down, right? Very much impulsive structure, impulsive looking structure to the downside, highest volume in this structure. We have a grind to start, quick move down, grind to end, exactly what you like to see. This point of control didn't exist yet at that time, so forget about this. But we did have a point of control and a value area low. There you go. And price moved into the point of control and then went up. Now, I didn't really pre-plan this trade in the morning. This is, as you can see, this was like 8 p.m. and I do my analysis. So I do my analysis in the morning, and price was here. So I had no idea this was going to happen, of course. But then that was a market order. So I marketed somewhere here. Didn't actually snipe the low. I marketed somewhere here. My stop loss was below this low. And my TP1 was the 0.382 taken from the high to the low, which was somewhere here. That was my TP1. So yeah, every trade I take is different. It's just that I know what I look for. I know my tools. I know Elliott waves. I know my boxes. I know my levels and how it works together. I know CVD. It's the combination that makes it work, and then it's the flexibility of entering, because every setup has slight differences. No? So yeah, the one trade can be fully Elliott waves, the one can be a limit, the other can be a market, and yeah, usually for market entries there's more patience. So imagine price would move up and hits the weekly naked point of control. I would only take a market entry if we then get more information. I'm not someone that generally snipes highs and snipes lows. I like to stay away from the very, very high volatility if I'm not yet part of a move. And I personally excel in ranges. That's where I find my entries. Yeah. We were... Okay, Ice Cubes Lady. I was so happy to find your channel. No clickbait, no boom, or no moon bullshit. Just analysis that resonates with my trading decisions. Thanks for your unique content. Cheers, Ice Cubes Lady. Also, by the way, Ice Cubes Lady, when are you going to Europe again? When's your trip? Because you didn't yet go, right? Because you were going to go for like a month. So I'm just wondering. Keeping up with your agenda now. Watch and listen. Welcome. Good to have you here. I answered this question. 2 minutes FOMC press a conference. Very nice. There's no more need for shorts in Nice. In Nice, in the south of France, everyone. J'habite à France. Oui, baguettes. So, I got to say, the day today was an amazing day. We had an awesome day, beautiful sunny day, and we really enjoyed our time in the ruins of Chateau Neuf. So, price moving to the upside. We are, of course, not surprised. Price took out the high here. Volume increasing, as you can see. Very nice. So WXABCY, well, looks pretty correct to me. And this can then be that potential wave C or wave 3. I mean, that's, of course, the question now. We have a weekly naked point of control at 105K. Of course, many people keep an eye on that level. I'd also probably keep an eye. Let's go to the 1 minute. Yeah, so on the 1 minute, probably would count here a 1, 2, possibly another 1, 2, 1, 2, 3. So you would still look for 4, 5, 4, 5 in an impulsive structure, wave C, wave 3. So price now pushing, highest amount of volume is in the recent candle to the upside. So in other words, this is labeled as a 2. And this here is labeled as a 2. Possibly it's a triple 1, 2, but I would at least cover a double 1, 2. So what you're going to be looking for is a wave 4, 5, 4, 5 minimum for an impulsive structure, that is, right? If you look for an impulse. And then it becomes interesting to look for trades to close or whatnot. So, yeah. So we keep an eye. We're going to keep an eye on the 1 minute. And also, you can see the size of these wave 2s. Now, preferably your wave 4s are going to be similar in size if this continues to be impulsive. And you do not like a wave 4 to touch the 0.618. So we do this. I recently got feedback that this red is very dark. So let me just make it white. So if price would hit the 0.618, then this is not counted as a 1, 2, 1, 2, 3. We got to think of something else. Either, again, a multi 1, 2. WX. There's overlap here. We cannot count 1, 2, 3, 4, 5 because of the overlap. So if price would come down to the 618, it would be 1, 2, 1, 2, 1, 2, 3, or WXABCY. Now, of course, we cannot see what happens inside these 1 minute candles, but yeah, highest amount of volume currently in this move up. And yeah, now it's just waiting. At least we took out the high. Now, that also means that there is now the potential for, of course, as price took the high, there is the potential for a flat, right? Which is A, B, C, and then up, right? So that would now be, quote unquote, I suppose, a bearish scenario. But let's hang around here on the 1 minute for a little bit. See what happens. How easy can one export tag reports? I've never exported tag reports, to be honest. That's a new one. Oh, tags. You mean tags like TAX. Like a tax report. Gotta say, I've never actually done that. I mean, I have an accountant, and what I show my accountant is basically just the proof of earnings in a quarter. So I just communicate my income and the data I can give. Yeah, I can download some stuff, but not necessarily a tax report. Not also sure what you mean if it's just a report of your trades and your P&L in a particular period, right? So that they can see how much you earned or lost in that particular period. Or you talk about an official tax report that you probably would need to get from a government, like Kraken or some other KYC platform. Perkyo, how likely would the scenario be to take all-time high first, then move down to 90K ranges before we go? That would be a expanded flat, Perkyo, which is your most common flat structure. Yeah. And at the moment, from an Elliott wave point of view, the flats on the daily remain very interesting. We hit the range point of control and bounced. A bit of extra confidence. Fed is live right now. I have to tune out. Cheers, Gulion. Give us the info. Second half of February. Interesting. Nice to use time as well. Theoretical is the word you were looking for. I once followed another Elliottician and then ended up finding out another guy using Neowave, which seems like completely bullpoo. That's like a variation. I don't know. I never got into that. Yo, Ronnie, man. Ronnie, how you doing? Ronnie here, the million. He's a content creator as well. And I think Spanish content / English content. And very active on Instagram. Travels the world all the time. This guy is everywhere. But welcome, Ronnie, man. Good to have you here. What's up? What's up? I think you're in India now, no? Got a reply to your WhatsApp message. I saw it. I haven't booked a flight. I'm a last-minute traveler. You're a market traveler, not a limit traveler. I do not, Guillaume. Hard to get away from paradise. We're pumping as we do. Driftholics, welcome. This is Chateau de Neuf. That's one of the more pricey red wines at the supermarkets here. Is that near you? Yes. At least it's not a. We didn't go to the vineyard. It's actually a rune. It's the runes, but it's just the name. I don't know. Maybe it's in the same area, but it's probably not too far away. If it's in the south of France around Nice, then yeah, it should be close. Nothing bullish on FOMC. If a magician comes to you and offers you either 20,000 in cash immediately or a 50-50 chance between 0 and 150, which one would you choose? Psychological question. I like those type of questions. I think it's a very good question. So either 20K cash or a 50-50 between 0 and 150. Interesting. So, look, I'll explain my thought process as well. Is the 50-50 chance? Isn't this like a science thing as well? Like this is direct gratification, and it's not really delayed gratification, but people tend to go for safe instead of risk. Now, I do like risk. So, of course, 50-50 is interesting. However, if the 20K in cash, if you would receive that immediately, and I trade with the 20K in cash, or I put it in some other places, I can make that grow to 150. You know what I mean? Of course, if you get 150, it's great. If you get 0, then nothing changes. So I guess like with my lifestyle, it also depends on the value. Is 20K a lot, or is it not much? It depends on where you are in life. So I do like to take a chance, and if it is 0, nothing changes. If it is 150, great, I got 150. So yeah, it's basically a question that is, can I make the 20K 150 in a relatively short amount of time? Or do you go for the 0 or 150? 0, nothing changes. 150, you can buy a toy or something. So yeah, I'd go for the chance, for the 50-50. So 0, nothing changes. 150, fun. Buy something, invest it somewhere, and if it's 0, nothing changes. Yeah. It's basically a question about what do you do with the money. That's actually like, for me, what is behind this. 20K, probably trade. 150, trade / invest. 0, life continues. And what between 100K or 50-50 between 0 and 600K? 50-50 as well. It's basically the same. 100K, fun to trade. 50-50, 0-600. It's a funny question. It's like some nice question. I like to think about that stuff. Change to volume candle. I've actually never used volume candles. Not even sure if I can. Volume footprint, you mean? I don't even think that I have access to that. No, there you go. Because I don't need premium. I have essential. I literally only pay for Tradingview to have more than 3 alarms or something it is. That's the only reason I don't use indicators. So I don't need 100 indicators. I don't need 500 charts on my screen and all of that stuff. I just need one chart. I have 2 indicators. Well, 2 is, the second one is my name on the chart. The first one is the volume. And that's it. So yeah, I only need more alarms. The only thing. If you're on Plus TradingView membership, you can break it down to the 1 second. I don't know that stuff. How long are you typically in a trade for? You always take intraday trades, or are you able to swing trades to hold for longer time? I am someone that tends to enter and close based on my target boxes. And if there are no clear target boxes or resistance levels anymore between all-time high and where I enter, it becomes a runner. Basically, that's when it becomes a swing. But I love closing trades and just take profit, I suppose. But a good example is that here I had a target box on the chart here, and then we had a weekly naked point of control somewhere over here, right? We had also a box here, remember, for the people that were here. So the long that I entered here, right, this target box I had, daily naked point of control, that would be a close because my risk reward ratio is more than enough. It's a great trade. We hit resistance, and I'm interested in then closing. I like to take profits, and then I look for a new opportunity. Right? Now, then price over here corrects to the downside, comes back up, 3-wave structure to the downside, basically a new long, hit my next box, exit. Wait for a new opportunity. Eventually, price comes down here. This was like overnight, which was honestly that was a little bit sucky. First of all, I was having dinner with friends when price came down, and then second, I wasn't awake when we actually hit the box, which is a pity. I would have loved to be awake. But this, right? I didn't have any boxes anymore, so entering here would have been looking for all-time highs. I didn't have any clear resistance, clear boxes. And then, of course, we dropped soon after. But mind you that over here, we had, first of all, quite a big range. This is the 1 hour chart. And we had very big bearish CVD. Highest amount of volume is in this candle. You take a 0.618 FIB from the high to the low, probably somewhere here. That would be your clear invalidation to get out. But you did already have very big bearish CVDs here. So that was like probably going to be then a TP1 in that case. But that is how I can get a runner, basically. Right, so I have a box here. I also have a box here. This is basically a just in case. But if there's no clearly identifiable resistances for me, that's the moment where I leave them, and I just let them go. So yeah, not so much a big swing trader. I like to enter close. Like one of my strengths is finding new trades, new setups. That's what I'm really good in. One of my, I suppose, weaknesses, as I have them written down as well in another trading window, another chart window, is the swing trading part, I suppose. But yeah. It's also style. I got burned many times where I'm like, I got a great entry and I tried to make it a runner, or you just follow the chart and you hope it becomes a runner, and then it doesn't, right? It hits my box and I take like a very small TP, and then price comes all the way back and you're like, oh fuck, should have closed. I got that box, and I know my boxes are very well respected, and probably most of the longer viewers here know that the boxes and resistances identified are very useful. So eventually I got into a state where I'm like, you know what? If my risk reward ratio is sufficient and we hit a box, I close. There's no whatever. I close. I look for a new opportunity, and when there's no box anymore, it becomes a runner. Yeah. How long am I typically in a trade for? Yeah, a day, 2 days, 3 days. Very rarely it's a week, and then you're looking for a swing, basically. So not very long, so to speak. Very much day trading style. You are here helping us here live, especially with the news. What's up, Alpha Reactions? Thanks, man. What do you think? How far will Bitcoin push right now? I mean, at the moment, we took out the high. So bullish scenario is your wave C started. Right? You have a double 1-2 at the low in that case on the 1 minute chart. Right, so 1 2 1 2 3 4 5 4 5. Right, and then it's about the retracement. Is it impulsive or corrective? So that is bullish. That's your bullish scenario basically, where this is then going to be counted as your as an impulse. Now on the 1 minute, did we touch the 886? Yes, we did. Now the fact that we touched the 886 here increases the probabilities to still take out this high, right? So it increases the probabilities that whatever is going on here is corrective, not impulsive. So because it's very rare for a wave 2 to touch the 886. It happens, but it's probabilities, and it's just low probabilities. And if, for whatever reason, of course, price would move down and takes the low, then I'll look for a flat. So then some A, B, and then C, and then come back up. Because at the moment, we cannot count a finished impulse here if we would look for A, B, C. We can also not count this as a 3-waver on the 1 minute time frame. All right, so because we have overlap here, 1, 2, 3, 4, 5 doesn't work because of the overlap, 1 and 4, not allowed. And if this is a corrective structure, we need a W, X, and then an A, B, C in a wave Y, which still leads to price taking out the high. So that is why I'm still looking for higher, either directly to follow the impulse, which has a higher probability as long as you don't touch the 618 at least. Alternatively, you create a flat. Oh. It's pretty difficult range to navigate right now. Lots of overlap on all the time frames. Yeah. Especially the range that started after the... I guess people may call it like Trump pump or something, right? All-time high, and then come back down, and then the range that happened after. Yeah, I mean, I wonder if you'll do. Would you mind view on? This is of course very. What's the time, by the way? It's 9. It's between now and max 15 min. I'm out again, but yeah. We'll do an altcoin stream. Also TP, of course, because you remember. You can also write me in Discord, man. Just analyze the chart, X and O. Send me a picture in Elliott waves or in feedback and Q&A. And then I'll check it. Probably check the chart myself as well. And then we'll do an altcoin stream at a later stage. Cheers, Nutrition Trader. How much capital do you need to live from trading? Well, I guess you should ask, it's a slight change in the question is, how much should your trading portfolio need to be? Because, of course, you can use leverage. So if you have a 10K account, you can do 5x leverage, trade with 50K, right? Now, I think that if you want to be realistic, from a risk management point of view, and you are risking 1% a trade, maximum 2%, but let's say 1% a trade, couple of trades in a month. I think with an account that is 50-ish K, you're doing good, because if you earn 4-5% in a month, that's 2.5K. Which will likely for most people cover their absolute basic needs if they have like just a regular apartment or regular rijtjeshuis or whatever stuff. So yeah, it's basically for me would start at 50. Depends on everyone's life. Where are you? What are you living in? You know what I mean? If you live in a country where the currency is incredibly weak and you are trading in dollars, then of course you need less trading income to sustain yourself in the country. So you can probably sustain yourself with maybe 20K, right? Or maybe even 10K. If you live in South Africa and you're trading in dollars and the rand in South Africa is what, 117 now, 118, right? Probably if you trade with like a 20K portfolio, making a couple of % a month, you're doing pretty good. No? So yeah, but I would start with 50. And of course, the higher your portfolio is, the easier it becomes because your 1% increases, right? If you risk 1% of 50K, it's $500. Of 100K, it's 1K, right? So if you gain 3% with 50K, it's 1.5K, which can be perfectly okay in some countries and not in others, right? But with 100K, you got 3K, and it makes life a little bit easier. But yeah, higher risk, higher reward, no? So it's all about that risk to reward. Volume candles are available in Essential, I think, not volume footprint. Volume candles. I mean, oh, wait, here. Volume candles, lol. No, it's also not available. Yeah, I'm not interested. I don't use it anyway, so it's okay. What's up, Trading Crypto? Because of Andy. Cheers to Andy as well. But welcome. Good to have you here. Yesterday I was chilling in the stream of Daywald as well. Many familiar names. But welcome, Trading Crypto. Welcome. Good to have you here. First live stream. Aviator, 115. Yeah, take it step by step, no? I mean, that would be all-time high, of course. So you first have 2 resistances to the upside. Be very patient and see how price reacts there. But on the daily time frame, probabilities are still higher to look for higher prices, which is, there you go. So finish 4 and then you move in 5. And then I think then 115 would be the low end. You'll be probably looking for higher. Welcome, Legendario. We see Bitcoin in 4-year cycle selling moving up. What is your view on the very long time frame, 10, 20 years? Can this move up be sustained? I'm not actually a big fan of the 4-year cycle and that sort of stuff because I don't know, this is just a personal view, but there's going to be that one cycle that's going to break everyone's portfolio. Like it's basically, Bitcoin always moves up. And then there's going to be that one cycle where it just does not go according to expectations. And 90% of the crypto people get absolutely fucked. So I don't believe in the steadily moving up forever type of thing. Long term, yes. Just like S&P and the NASDAQ and whatever. If you look at all those charts, then over time with inflation as well and all that stuff, the charts move up. But there is significant periods of downside or ranging structures, and then you get the next leg up. Currently with Bitcoin, of course, we have the bear markets, but they're relatively short. They're relatively short. It's like 1 year bear market, and then 3 years we go up and a bit of ranging and whatnot, and we continue. I think at a certain moment there is going to be that one period where it just does not follow the expected 4-year cycle, which people... I guess the 4-year cycle only became a thing after 2 cycles reacted pretty much the same. And people were like, hey, there might be a pattern here. But that is basically the same as using a tool, right? You use Fibonacci and you're like, wait, price reacts quite often at the golden pocket. I might actually found something. Till the one moment that the golden pocket does not provide a reaction and it hits your stop loss. You know what I mean? So everything works till it doesn't. And I have a feeling it's going to be the same with that. But yeah, long term, up. But I do not trust those type of cycles. I'm very aware of the very long, like decade-long sideways structures that we had in in you know the big markets as well, or multi-year downside, and you know that type of stuff. So I won't be surprised if that will happen in this industry as well. Some scalpers can find multiple trades every day. Yes, but then your trading frequency is of course related to your risk-reward ratio and your win rate. You can trade a lot, but it doesn't mean you're more profitable than someone that trades very little. So there's a lot that comes into play, right? So the risk-reward ratio, your win rate. If you trade, right, like fees, scalpers have a problem or higher problem with fees. So you need to find exchanges with very low fees. But yeah, there's more that comes to play. Portfolio size, right? A scalper can use a lower portfolio size if they find more setups with a similar risk-reward ratio and win rate compared to a day trader. But if a scalper has a lower win rate with a lower win rate, lower RR, then a day trader might actually, or swing, might actually beat the performance of a scalper with less work. Orang Utang, yo. What a name. Uit Limburg. You know, my family is actually from Limburg. My grandma, that's where they come from. My grandpa as well. So from my Dutch side, like my dad, Dutch side. From Geleen. My family from Geleen. Schobbers. Very nice. Welcome. Yeah. It's scalping versus trying to earn a lot of money in a short amount of time. Greed, trading psychology, like there's a fine line there. Thanks, Ice Cubes lady. Oh, I actually completely forgot to write down when the analysis started. Literally, the analysis started. Wait, it's the end of the live stream. It doesn't really matter. Everyone, if you just joined, the analysis was done at the beginning of the stream at like 10 minutes in or 15 minutes in. I'll put it in the VOD, like in the timestamp. Put a timestamp there. But I completely forgot about it. I'll check ETH in a future live stream. So same with other alts as well. Same with the other alts. Oops. When there's news, it's interesting to keep an eye on Bitcoin specifically. On the high time weekly money, are we not in the middle of a double 4-5 wave? My monthly time frame, bounced my nose there, is, wait 1 second. I go to my YouTube channel. I have shared my monthly thoughts. Here, where is it? There we go. This video. It's 11 minutes. There you go. Bert, welcome. Good to have you. Any risk in trading Bitcoin with 2x leverage? It's not about the leverage. It's about how much you risk of your portfolio size. So my standard leverage is usually like 10 or 20x, sometimes even 30x. But my risk is 1%. It's interesting, huh? So even though I trade with higher leverage, I'm not trading with a higher risk. The reason I use higher leverage is twofold. One, I don't like to have all of the money on the exchange. Two, I still have other capital to trade in other assets if I wish to, or have multiple setups running in Bitcoin, for example. So, or have more room for compounding, right? So your leverage is not related to your risk, right? So you can have, if you have a portfolio of 100K, right? You risk 1%, that's 1K, cool, right? And you do this on 1x leverage, right? That's fine. That means that if you have a stop loss, because this is about stop loss now, right? So if your stop loss is 1% away, pop, yeah, stop loss is 1% away. You are risking, right? 1% equals 1K, right? So this trade is going to cost you 1K if it loses, right? However, if you have a stop loss of 0.5%, and you want to risk 1% of your portfolio, oh, sorry, I wrote 1x there. It needs to be 1%. So, oh no, that was the leverage. So you want to risk 1K. Your stop loss of your setup is 0.5%. So what's now? Well, like, what do you do now, right? Well, in that case, you need to use 2x leverage, right? In order to risk 1%. Because if you use 1x leverage, you're not going to be able to risk 1%. You're going to be risking 0.5%. It doesn't work, no? So now you need 2x leverage. Now, that does mean that if you, with a 50% stop loss, if you use 2x leverage, your whole 100K portfolio sits in this trade, meaning you do not have any capital left for other trades, for compounding, for whatever, right? Other assets. So now, instead of using then 2x, right? What you're going to be doing, let me just do pop. You're like, you know what? I want to take this trade, right? Let's make it easy and go back to 1% for the sake of simplicity. So you're like, yeah, well, I want to trade this setup, but I don't want to have my whole 100K portfolio in this trade and not have any money left, right? Like I want to do other stuff with it. Well, in that case, right, just put your leverage on 10x or put it on 20x. It doesn't matter, either or. Put it on 10x. And then 1x of your 10x goes in this trade. So you're risking 1K, right? But now you still have 9x left, basically 900K, right? If you understand what we're doing here, right? So you're now using leverage not to increase your risk for your position, but your risk is still 1%. You still risk 1K, but now you used 1x of the total 10x that you can use. In other words, you still have 9x left, right? And with this 9x, you can do other stuff, compound, other positions, other assets. Alternatively, you have a 100K trading portfolio. That's what you want to use for trading. However, you don't want to put 100K on an exchange. You may not trust it. So instead of putting 100K on an exchange, you put 10K on the exchange. Now, this means that you automatically trade with 10x. Oh. Because your 10K times 10 is 100K. So your trading size portfolio is 100K, but you don't want to put 100K on your exchange. So you put 10K on the exchange because you're comfortable with 10K, but now you're using 10x to mimic 100K, right? And if you use 10x and you have your, you have the same trade here and you have your stop loss on 1%, then with your 10x, right, you can now risk 1% of 100K, which in other words is 1K. Right? But you need 10x to risk 1K for this setup. Now, your trading risk is perfectly aligned with your plan because you have a 100K trading portfolio. You just put 10K on the account because you don't want to put the other 90K in your account. You maybe don't trust the exchange as much, or you have other purposes for the money. I don't know. But then you have 10K in your account. You put your leverage on 10x in order to risk 1K, and 1K is 1% of your trading portfolio, 100K. Right? Yeah. But you need to bump this up, right? This needs to be 20x if you want to do like other stuff. Put your have multiple trades and compound and whatnot. But you see, like, leverage, very, very often people think about leverage as a mean, like, to increase your risk. Oh, I'm trading 30x and 50x and 20x. It doesn't mean shit, right? I can trade 100x and I can risk the exact same amount as I do with 1x. It's not about the leverage. It's about the risk. And there's more than meets the eye. So whenever you see a screenshot because people love to share their little screenshots, which, by the way, in my Discord group is not allowed because it doesn't serve a purpose, doesn't help anyone. You often see people with like 100x leveraged long or short. Generally, it's cross-related, but anyway, it's for another day. It doesn't mean anything. It doesn't mean anything. So you can trade 100x, you can trade 1x. It can have the exact same amount of risk. You don't know what someone does in the background. Like, what are they actually doing? Someone that trades 100x can also trade with $1. You know, they might be learning, have a $100 account, risk 1%, but they put their leverage on 100x or put it on cross. You don't know. They might be, you know, trying to snipe the exact low, have 10 losers in a row with their 100x, and then the one trade snipes the low, and then they share that one, and they don't share the 9 losers. They only share that one 100x winner and be like, oh, look, social media, I sniped the low. Look at me. I'm so good. It doesn't serve a purpose. I hate those screenshots. It doesn't help anyone. Such bullshit. So anyway, it's all about risk. It's all about risk management, so to speak. What's up, John? By the way, what's up? Good to have you here, man. John from Australia. Cheers, Jay. You knew Monty Mouse? I do not know. We are doing X, so the 0 to 618 Fibbo is the bottom to keep going up to 105. 105. We are doing X, so the 618 fib to keep going. I'm not sure what you mean, Toot, but because you're talking about X now, but I don't know what you mean with X in this range here. The 618 is an invalidation for a wave 4. But with wave X, it's not a... Wave X can go all the way down to the 886 or even beyond the origin of W as well. If it's a sideways WXY, not a sharp one. Kenny, you made $300 based on your own trading plan. I'm not a financial advisor. I'm not responsible for your wins and losses. I don't care if you lose. I don't care if you win. But I'm happy to see that you execute based on your own probabilities, your own trading plan, your own system that you made based on data, experience, and a different set of tools. And you made $300. Congratulations. What's up? Thanks, dude. What's up, Nicholas? Welcome. Someone deleted my message. Oh, maybe there's Gwilliam. Maybe there is a banned word in your message. In Discord, there's a banned word list. Some of the craziest stuff, like this is just to protect all of you with scammers. Scammers use these words all the time. So in order to avoid comments in live streams and, you know, like live streams and comment section on the videos, I'm very active with avoiding scammers. So diplomatic. No, it's reality. I can't take responsibility. I'm responsible for my own trading. I either fucking suck or I'm doing very good, or it's a mix of both, and I'm happy, I'm sad. You know, like I'm responsible for what I do, my plan, my system. But online, I enjoy sharing my expertise, and people do with it what they do, but I'm not responsible. So, you know, I like to solve the puzzle of what Bitcoin is doing from an Elliott wave point of view. That's definitely a passion that I have. Using Elliott waves, of course, is the system. So yeah, very, very diplomatic, I suppose. You couldn't be a politician, you know. No, that's not me. Hey, everyone, I gotta go though. So at the beginning of the live stream, I mentioned that I'll be online for an hour 15 minutes. It's an hour 15 minutes right now. I gotta go because it is time for dinner, and then it's time to get to bed. So the Elliott wave analysis has been done at the beginning of the stream. I'll make sure to put a timestamp in there. It's about 10 minutes or 15 minutes in case you just joined, you can go back. I'll put the timestamp, of course, in the VOD. And yeah, let's see what I wake up to tomorrow morning, and that's that, right? Probabilities, everything communicated earlier. So tomorrow morning will be a new video, and in the afternoon another live stream. Let me check my agenda just to be sure here. Let me check my agenda. Tomorrow, yes, very much. Perfect. So yeah, tomorrow morning, video, tomorrow afternoon, live stream. So there we go. Okay, very nice. Good night, Orang Oeting Obelix. Thanks for your 10 gifts, man. Really appreciate it. Jeroen, thanks for being here. You should swing by for a coffee in Roermond next time you go visit Oma. She now lives in North Brabant, but yeah, sometimes I'm still in Limburg. So we finished X, X or B most likely. Yeah, looking for an impulse. So, but trade safe, everyone. Of course, increased volatility, and also the upcoming days we have some increased volatility with the news, but more about that tomorrow morning. Also a good reason to live stream in the afternoon because it's going to be probably a bit news heavy. So let's see what we get this week. But trade safe, and I will see you again tomorrow.